All right, folks, today is Friday, August 21st. It's the end of the week. It's the end of the trading day. We're going to do a quick review of what our performance was for today based on the adaptive entry system signals. There's four signals we follow: momentum, consensus, trend, and trend continuation. Those are the four signals that we primarily follow. We also mix in there fractal breaks, which we talk about quite a bit in our live trading room. And we are pretty excited about the performance that we are seeing consistently from the adaptive entry system. So the adaptive entry system was developed by New Cycle Trading and Analytics, and it's been really a stellar opportunity for traders in our community to hit the profit target that they desire on a daily basis. So we profile, and you can see the chart here, we profile the NASDAQ 100 futures, although we have people who trade the Russell 2000 futures. We have people that trade ETFs off of these signals. We have options on ETFs. We have people that trade ES futures. So this is not unique or exclusive to the NASDAQ 100 futures. But here in the live trading room, it's easier for us to profile a single underlying equity derivative to demonstrate how the signals work, the logic of the signals pairing together, entering on the signal, exiting at the right time. And so that's what we do here in the live trading room. So what we're going to do is we're going to take a look at our performance for today, 8/21. And I will scroll back here for the benefit of those of you who like to scan from 7 o'clock forward. So there's 7 o'clock then until the end of the day. Now there's some data that's not filled in here. I finish that up later. That data that's missing does not affect the overall performance of the two primary categories that we track. So let's go ahead and look at the daily summary. So the two primary categories that we track, you're familiar with this by now if you've listened to these on a regular basis, is trading from 7 a.m. to 4 p.m. and taking the trend bias trade signals and the continuation signals. So it's a combination of trend bias and continuation. We did 28.75 points today on the NASDAQ 100 futures. 28.75, that's $20 a point. So we're going to translate that to our personal trading plan here in just a moment. In the other category that we track, which is 9:30 to noon, where we take all signals, trend bias, continuation, consensus, and momentum signals, we take them all as they are presented, but we only track from 9:30 to 12 o'clock. And we do that for the benefit of those folks who want a limited amount of time, a more limited amount of time than to trade than, say, trading from 7 o'clock to 4 o'clock. We did 30 points and 10 trades. So I'm going to go ahead and plug these into our personal trading plan. This is one of the most important things any trader can do as you are growing your trading business and then ongoing to have an idea of what your personal financial forecast is for your business. So I'm going to start with the trend bias only trades, trend bias and continuation trades. And I'm going to go over to our data entry field here, which is, if I scroll up, you can see here that we're listing these, recording these under the NQ column. That's the NASDAQ 100 futures. So we did 28.75 points. It's $20 a point, so that's $575. And we are trading 3 contracts. So take that times 3. So that's $1,725. And then in terms of number of trades, we did 18 trades. Each trade was 3 contracts, so that's 54 contracts. So now we can come back over here and we can see that our net performance for today after fees and commissions associated with those contracts is $1,509. Now here is the most important part of updating your personal trading plan. You want to make sure that everything from here forward is being forecasted based on your reality, and your reality is your current run rate. We've now completed 7 weeks, I think it is, 1, 2, 3, 4, 5, 6, 7. So we have 7 weeks that we've been going through this process and reporting to you how to trade the adaptive entry system, how to translate your performance into your personal trading plan. So we have 7 weeks, but that means that we've got 45 other weeks in a 52-week year. How are we going to plan appropriately, correctly for the remaining 45 weeks? Well, we've got 7 weeks of actual history. And in that history, on our winning days, we're averaging 36.21 points a day. That's on our winning days. On our losing days, we're averaging 15.41 points of loss. We plan in our forecast to have 1 losing day a week. We may have more than that. In reality, we may have less than that. But right now, we are actually on pace to be right on plan for that. So I'm going to leave the losing day points alone, and I'm going to focus on the winning days points. So that's 4 days a week, and we're averaging 36.21. Now here's the critical part. Right here in this field, in cell E5, we want to have that number, which is driving the future forecast. We want it to be as reasonably close to our actual run rate as possible. So I'm going to change that from 33.8 to 36.2. And so 36.2 points per day is now planned for the remaining 45 weeks, 4 days a week. Our average of losing days is 15.4 points, and so we're going to leave that at 15.4 because it hasn't changed at all. So we now have a very realistic forecast for a 12-month period. Our forecast is based on what we've actually accomplished. We've had a combination of winning days and losing days. And you can see down through here that, here's a losing day, here's another losing day, small, here's a big losing day. And when you have those big losing days, they tend to weigh on your emotions as a trader. And one of the values of this trading plan is to be able to come to the trading plan, plug in your performance, and then adjust your future forecast to be in line with your average, your actual run rate, and that will give you a realistic forecast. It doesn't guarantee that you're going to make 36.2 points a day. It just means that every single day when you complete trading, it's important to update this so that it is as realistic as possible and as close to your actual run rate as possible. So what all that means is if we trade 3 contracts max, we never exceed 3 contracts through the course of a 12-month period, that our income could potentially be just over $400,000. So just over $400,000. Now we started with $5,000, and what we're allowing the trading plan to do is to guide us in terms of scaling contracts. Should I be trading 1 contract, 2 contracts, 3 contracts? It's limited to no more than 10% of the balance of the account. You need $500 per contract of margin to open a trade, and so we will not allow more contracts to be traded if it exceeds more than 10% of the balance of the account. So that's limiter number 1, and then you can set as a trader a ultimate limit that once you're at that 10% level, you could limit it to whatever you choose that's most comfortable for you in your own personal trading, your risk tolerance. We've built a conservative plan that limits it to 3 contracts. If I were to change this to, say, 5 contracts, not 56, if I were to change this to 5 contracts, you'll see that the number of contracts will start to change. It increases to 5, and that changes the income forecast over the course of 12 months. So you can put it at whatever you want. If you're ultra conservative, you want to put it at 2 contracts, you will never trade more than 2. Now, right now, I've coded in whatever our planned number of contracts is over here so that it doesn't change if I play around with the forecast number. But even so, going forward, even though these were 3 contracts, if you changed your mind and decided I don't want to trade more than 2 ever over the course of the 12 months, it's about $285,000. So I'm going to leave it at 3. I think that's a very realistic, reasonable forecast. Today is the 21st, so I'm going to go out 2 months, and I'm going to have an idea of where I could be in terms of account value 2 months from today. It's just kind of a 2-month rolling number that I like to look at. And I use that because a lot of traders like to know when they could take money out, not interrupt their growth, and that's how you plan. This personal trading plan is absolutely a must for every trader to know where you stand in terms of a financial forecast for 12 months. So let's take a look at our other category. Our other category is the 9:30 to noon. We did 30 points, so 30 points times $20 a point is $600, and we're trading 3 contracts, so it's $1,800. We did 10 trades, 9:30 to noon, 3 contracts per trade, so it's 30 contracts in total. Okay, so now the most important thing that you can do is to check and see where you are in terms of your profitable day average and your losing day average. Our losing day average is right in line with what we've planned, and the number of losing days is right in line with planning 1 day a week. Sometimes you're going to get a little ahead of that. You might have, 9 losing days after 8 weeks, and there's going to be other periods of time where you might have, let's just say 15 losing days after 17 weeks. So I would keep it consistent and planned at 1 losing day a week, and then just make sure that you know what your average of the losing days is and plug that in as your forecast. And then 27.8, we're right there. We're right at 27.8. That's the average of our winning days. And that takes us with 3 contracts to a $290,000 income over the course of 12 months. So I'm going to adjust this again to 1021, and there's $76,000 that you could have available. You might want to take out some for income, to live on, to enjoy, to have fun, etc. The whole purpose of the personal trading plan was to give you an idea of how to plan and how to view your income, how to manage your emotions around winning days and losing days. And frankly, I've never seen anybody who does a thorough planning as an individual trader. So we like to view each of you as a trading business owner, and it's important as a trading business owner that you plan appropriately, you plan your financial forecast, and you know where you stand at any given time. And I'm going to emphasize this one more time. Look at a couple of these days in here. We had a 47-point losing day. We had a 22-point losing day. Those start to weigh on your emotions if you have no sight of where those fit into the big picture. But fitting those into the big picture says, okay, so it's just part of the nature of trading. I might not have felt good that day, but once I plug them into my personal trading plan and I see that I'm on pace, I am on a run rate that could potentially earn me $290,000 over the course of 12 months, that feels pretty good. And if it doesn't feel good to you, you feel like that's not enough, well, you have the flexibility to adjust the number of maximum contracts. If you put in 5 contracts because you want to make $460,000 or at least plan for that, you're never going to get up to 5 contracts unless the total of 5 contracts, the margin requirement for those, is still less than 10% of the balance of your account. So it's limited. It's very conservative forecast, and it's entirely up to you to plan it and spend the time at the end of the trading day to plug those numbers in. All right, so the last thing I want to just share with you here is the averages. There's a variety of categories that we track. We've got some that we're actually researching. And what we're interested in tracking is not only the total performance, total points, but we're interested in tracking what the averages are. Some of these are pretty big averages, but we also track the win-loss ratio. And then the last thing is, well, what time frame was that being tracked? So we've got time frames that are actually 13 hours, 3 a.m. Eastern to 4 p.m. Eastern. And we've got other time frames where we'll keep an eye on like 9 to 11:30 or 9:30 to 12. So we're breaking it down, and this is a very flexible tool for us. So if somebody in our live trading room says, hey, can you tell me, what it would be like if all I could do was trade from, say, 9 to 11? Well, yeah, we can do that, and we can show you exactly what that looks like on an average basis. It's not a guarantee that's what you're going to achieve. It's just simply calculating mathematically what the average is during that period of time in that category. And maybe it's trading all signals, maybe it's only momentum signals, maybe it's trading from 9 to 11, maybe it's trading from 7 to noon or 7 to 4. There's a lot of flexibility in here. So what I'm really excited about is how the data is being gathered, and also that it is showing consistently strong average performance in most every single category that we track. Now we've got some other categories that we don't have a lot of data tracked for yet, but the reality is we are seeing strong, consistent performance regardless of what time period and regardless of what method you choose to use. If you want to trade all signals, 7 to 4, hey, that can get pretty intense because there's a lot of activity. There's a lot to do when you're trading 7 to 4 and you're taking every single signal. It's a simple process to take the signals, but you still have to remain actively attentive and engaged throughout the day to do that. Well, that's averaging about 83 points a day. At $20 a point, that's $1,600 a day on a single contract. And in that category, it's just under a 73% average win rate. Maybe you don't want to be that intense all day long. Maybe you only want to trade the trend bias trades and the continuation signals from 7 to 4. Well, that's 38 points, almost 39 points a day. That's still very solid, but it requires a lot less attention to only trade the continuation signals and the original trend bias trigger. So it's entirely up to you to decide where you want to focus your attention and how much time you want to devote to your trading every day, a limited amount of time or a much greater amount of time. And then how much attention do you want to pay? Do you want to trade every single signal, from 7 to 4 or 9 to 11:30, whatever you choose. 7 to noon, I'm tracking 9:30 to noon, but 7 to noon is a very strong average also at 49 points. Listen, 50 points a day is $1,000 a day on a single contract. I think anybody who hits a number north of 20 points a day and plugs it into your trading plan, you're going to be delighted with what that future forecast is, depending on where you set your maximum contracts. So that is the summary for today, and I'm going to just put this up here, and you can see what the summary is for the week in these two categories by just scanning down through here. Monday was 30.25 points, and then 26.35, then 53.5, then 53, then 28.75. We have a lot of consistency. Doesn't mean the numbers are always going to be exact, and we're definitely going to have losing days. We had 2 back-to-back losing days. That never feels good. And then we have one day that just kind of blew it out of the water. We're just going to take them all in stride, and we're going to take them all as they come. So that's the summary for today, folks. I really appreciate you being here with us, those of you that are in the live trading room, and those of you who may just be looking in to see what this is all about. I appreciate you spending a little time with us. Thank you so much. Hope you all have an amazing weekend.